check, mic check. Okay. Check.
Tamam.
Ses. Oldu. Oh, hello.
Okay.
Hi.
Geliyor. Ayağa mı kalkalım? Ayağa kalkalım mı?
Welcome back, everyone. So I hope you enjoyed the break and had the time to meet each other.
Now it's time for our second panel, Climate Means Business, Investment Risks and Opportunities, moderated by Andrea Webster, one of SustainFinance's beloved advisors. The panelists are
Andreas Posovak, Embera Partners, Burcu Türe, Controlmatic Technologies,
Elif Hamlacıoğlu, IDEM Renewables, Shamila Subramani, National Business Initiative, South Africa.
Thank you. It is an absolute pleasure to be back in Turkey and in Istanbul. And I'm reminded of one of the reasons I like being back here is the hospitality. I was confused. I thought lunch was being served then, and actually this is the break before lunch. So I'm reminded of your passion for food, and I will enjoy indulging. So it's great to be here. I'm conscious usually that energy is low just before lunch, and we really want to bring some energy into this discussion off the back of the previous debate, especially with the kind of governance level and stock exchanges. I am delighted that we have two Turkish energy companies here who really are kind of right on the cutting edge of the energy transition. We have an advisor for businesses and boards to bring some reality into the discussion, and finally we also have, and I was going to do names, and my pain of trying to pronounce Turkish names has been taken away from me, so I'm going to stick with Christian names. Elif and I've been practicing all morning, and now I don't have to say it. And it's an absolute delight to have Shamila here, who's come from South Africa. She advises South African businesses, but for those that don't know, she is actually very highly regarded in global sustainability because she led the work with the Johannesburg Stock Exchange on their climate disclosures and really connection into the real economy. So thank you for coming, and pleasure to be here. Just sort of to kick off, I think, and then really because this is down to you, from the work that I do alongside advising SustainFinance with the World Benchmarking Alliance, is looking at the transformation of the finance system, and I have a privilege to move across global policy as well as some of the large financial institutions. And I can tell you that beyond this room today, there is general acceptance that the battle for net zero is going to be lost or won in emerging markets. So that discussion is live and is happening at the moment. And I do know that this week there is a climate finance global policy workshop that's happening in Ankara this week. I chose to be here instead. So this is very kind of at the forefront of policy and those that are leading on trying to push on climate finance. So although we read about the kind of polarization in politics, and whether you believe in climate or whether you don't believe in climate, the title for our session, Climate Means Business, we are past the tipping point on the momentum of where money is going towards climate finance. And I think Turkey embodies, it could be the poster child if it steps into this opportunity of capturing money in the global financial system and the attention of global governments around the energy transition. I think Turkey as well, you live and breathe this, but Turkey is standing out in terms of its commitments to increase renewable energy, and we see the strong commitment, the strong focus, and I kind of liken it because you've you've got a huge economy, you're growing. I liken it, you're trying to change the wheels on a car while pressing on the accelerator at the same time. You know, and what does that mean for you in business? How do you move forward on it? Especially moving away from your dependency on imported fossil fuel energy, but seizing that opportunity to switch to economic development from sustainable energy solutions. So it's a big ask, but it's a huge opportunity, and we're going to explore that today. I'm going to start off with Burcu, if that's okay. I think Controlmatic, the broad perspective from your business portfolio really gives us insight in whether you see that is it managing risk or is it seizing opportunities that are motivating you and your clients right now, and are you seeing any changes there?
Thank you, Andrea, for your question. Before I step into my opinion, thanks for everybody coming. I see many familiar faces and friends. Thanks to dear Kübra and SustainFinance and CFA Society for inviting Controlmatic. We are very happy to be part of this summit. Andrea, I think it's both, because we as Controlmatic, I think, seizing opportunities to innovate on sustainable solutions, to provide sustainable products and technologies for our clients and stakeholders to enable them manage their current and potential risks, also run resilient business, reach their final sustainable targets. And as an EPC and system integration company, I think we conduct various types of hundreds of projects in over 35 countries. Mainly primarily focused on electrification, automation, and digitalization lately. And I think through our projects we make significant environmental and social investments, and we enable our clients to do so. For instance, by constructing a resilient infrastructure, or fixing water leaks in the water supply system, or enhancing a municipality power grid, we provide access to reliable energy and more clean water. Thereby, we are as well enhancing the well-being of the communities we serve. And this exactly perfectly is matching with our sustainability commitments too. Controlmatic already committed to providing trustable and sustainable solutions for its clients and stakeholders, but at the same time creating a resilient and healthy planet for all well-beings. And to be honest, this commitment is a major driving force why we have been transitioned into a vertically integrated technology company. We made significant investment on research and development, focused on sustainable products and technologies, for instance, lithium-ion batteries, robotic arms, IoT modules, lately also communication satellites. Today, lithium-ion batteries, for example, easily can empower industries and as well as us individuals at home base to store and reuse renewable energy very efficiently. Or industrial organizations, government companies can use our IoT modules to conduct comprehensive environmental and social monitoring, and finally retrieve very accurate data. And why we are very keen on energy storage system and battery technology is that, as you already know, reliable energy and clean energy demand is increasing very rapidly globally, in parallel to rising climate risk too. And by 2030, it's expected that power grid capacity will be doubled. And there, in this electricity value chain, energy storage system and battery technology stand as a crucial, very important piece in building trust between end users and governments, which reshape our power supply system. And when we consider our global commitments around net zero plans or low emission plans, or when we consider the outcome text of COP28, we see obviously that fundamental change need to be done in the way of how we generate electricity, how we store electricity, and how we distribute it finally. There, absolutely, battery storage will ensure us continuous and reliable power supply harnessed from renewable energy. When we look from the global green market perspective, it's very obvious that in recent years, innovation in energy storage systems piqued the interest of investors in their hunt for the next unicorn. For example, according to a McKinsey report, it's already said that $5 billion United States is invested in energy storage system. And energy storage system global market is expected to reach $500 billion in the meantime. These two facts can solely show us the potential of the industry as well. And also it's expected that almost, I think, 70 gigawatt per year solar, wind, and energy storage system installation is expected in the United States till 2030. And for example, by 2030, Saudi Arabia declared that they plan to generate their 50% of their electricity from renewable sources. So that before I wrap up my opinion, I would like to give an example from our local market that Turkey has the fifth biggest installed renewable energy capacity in Europe. And emerging markets like Turkey are very ideal for companies like Controlmatic, for example, who see a clear sign in also domestic and international level. Eventually, I can say that we as company attract, motivate, and are motivated in both ways by embracing innovation to provide and produce sustainable technologies, and also fostering inclusive access to energy users. And we address thereby immediate and potential risks, and also support an equitable and sustainable development worldwide. Thank you.
Thank you. Thank you. Really, really interesting, the shape of the Turkey market and in perspective to the global opportunity as well. Elif, I'm going to turn to you as the this other Turkish energy company. And Adem, I think for me is really quite fascinating, the history, the roots of it, and where you've come to today. So I'm quite interested, I think, for the audience, like what were the most important factors that have contributed to Adem's success? And like, what's really driven the business growth for you?
Of course, before I dive into that, into the answer of the question, thank you so much for inviting me to this panel. I'm so happy to contribute, and thank you so much for this fruitful discussion. IDAM has roots tracing back to 1980, and it's the first, well, I'm talking as a group. I will give an example of IDAM Renewables in terms of the renewables growth. The group is the first and it's one of the largest integrated energy groups in Turkey. And the success of renewables, the success of the group was mainly due to being a pioneer in the sector too. And well, the growth of renewables and the needs in the country, I will maybe mention later on in our next topic. But with regarding the group, our group operates in each value step of the Turkish electricity sector, Turkish electricity market. It employs around 12,000 people and also generates $3.5 billion of annual revenue, actually. And being a pioneer, I've mentioned being the pioneer points. One of them was the group is the first private company to build a hydroelectric power plant. That was the starting point of our renewables journey. And currently, IDAM Renewables, 100% subsidiary of the Group is the largest pure-play renewable energy company in Turkey, with its capacity of 1.2 gigawatts. And we still continue our investments and we continue our growth, but our growth was mainly driven, together with this sector, with our sustainability efforts, but not only on environmental and social issues, but also on financial. So they're all linked together. And I would like to mention a case regarding our refinancing and growth financing opportunity of our green Eurobond issuance. Erdem Renewables is public listed in Istanbul Stock Exchange, and it was IPO'd in 2021. And we have issued a green Eurobond of $750 million in international capital markets in 2021. And it was the largest green Eurobond issued from Turkey at that time, and in a single tranche, actually, in all corporate bonds. And it was the largest deal by an energy company in Central and Eastern Europe, Middle East and Asian countries at that time. And almost 100% of our investors were foreign investors, and more than 80% of our investors were real money investors. And this was a huge success for us. And 10% of this tranche was invested by EBRD. And this was a result of a journey that we had on sustainability, environmental, social and governance issues, actually. And I want to touch on those points right now. We focused on the best practices on ESG and HSE execution, first of all, and we took global standards to be compliant with. For example, Equator principles, EBRD principles, and since EBRD became one of our investors, we had a due diligence on environmental and social issues in terms of EBRD's performance requirements. And we have started this journey by publishing our very first sustainable report in 2019. And since then, we are consistently publishing our annual sustainability reports. We have committed that during this bond issues, we have committed that 100% of our installed capacity as green and renewable energy, and we have published our green financing framework, and we have after the completion of this largest green bond issuance in Turkey, we became fully compliant with the green bond principles, and we are continuously publishing our annual allocation impact reports. And together with that, not only with our sustainability reports, but we had other initiatives too. We have been started rating by ESG companies since 2020, just before this green bond issuance, and this ESG rating was also a contribution to this bond issuance success. We have been rated first time by Vigeo Eiris Moody's, and at the time we have received the rating of A1. It was the top rating at the time, and we became the first amongst the emerging markets and Turkish utility companies at the time. And we have built up an effective governance network through our board of directors and also board committees. We have 5 board committees due to CMB rules. Since the company is publicly listed, we are obliged to have 3 board committees of audit committee, corporate governance committee, and early detection of risk committee. But we have added 2 more board committees in order to show how much importance we give to corporate governance. And these 2 additional board committees were Investment Committee and Sustainability and HSE Committee. And these committees are also at board level. And in terms of our board of directors, board is represented by 3 independent members currently, and we have 37.5% independency. And together with that, we have 4 female members currently. And 50% of the board is represented by female members. And together with that, our other initiatives on sustainability were we are the UN Global Compact participant. We are a signatory of Women Empowerment Principles. We have been reporting CDP since 2020 again, and in the last 2 years, we have been included in the global A list 2 years in a row, and that's the first time in Turkey to have been listed in global A list 2 years in a row, and we had the highest score in Turkish energy sector again with IDEM Renewables. We have been included in Sustainability Index and Corporate Governance Index in Istanbul Stock Exchange, and last year we had the highest corporate governance compliance score in Istanbul Stock Exchange at the time. And together with that, since we are publicly listed and we have issued this green Eurobond in international financial markets, we are being included in ESG indexes, and we receive questionnaires from them, solicitedly and unsolicitedly. And some of them are FTSA for Good ESG Index, Equileap Gender Equality Index, Equitix, and Sustainable Fitch, and it goes on like this, and we are being recognized in the international markets. And together with that, in order to reinforce strong corporate governance, IDEM Renewables obtained, during the preparation of bond issuance process, obtained 5 ISO certificates in order to improve its management systems. And all these efforts actually contributed our success on this green bond issuance, and this green bond issuance helped us to refinance all our project financing loans, and together with that, to help our growth investments. And we are growing, and last year we had an additional 160 megawatts of installed capacity for solar and wind power, and we still keep growing on that. And thanks to our sustainability efforts in both ESG and financial matters, we could gain the success on this.
Great, thank you, and congratulations on that. I think that example, that the amount of investment and commitment that you've put into reporting, which is painful, but you've realised the benefit from it in that bond issuance. And I think what was interesting, like it was 6 times oversubscribed. Yes. I believe. Now, Shamila, I'm going to turn to you because it's a great example of the commitment and the fact that they've gone to the markets to raise money. Now, you have first-hand experience of business coming to market to raise money. Is it that kind of green bond label? Mm-hmm. Is it worth it? Yeah. Could they have gone to the markets and raised money anyway? Or if it's just a normal bankable business with a good growth trajectory, would it have had the same attraction?
Thank you, Andrea, and good day, everybody. It's such a pleasure to be here, all the way from Joburg, and first time in Istanbul, so thank you for the invitation. Thank you, Kubra, for this wonderful event. So if I look back and I think about the experience I've had in my previous role, which was the Johannesburg Stock Exchange, that was a key question, right? Is this actually going to make a difference? So we know the global experience has seen it consistently oversubscription for green bonds, and we've seen similar in sustainability and social bonds as well. And I think that has been something we had to look and think, will this play out in our own market, right? What will this look like? So there were 2 examples I'd like to raise, actually, Andrea, in the local market context. The first one were municipal bonds that were coming to market. One was a green bond, and the other one was a vanilla bond. Now, behind that, the debt profile of both issuers was very, very similar. So we kind of could say that they were starting off the same base. So with a similar, and it was a really wonderful example at that time, it's something that doesn't often happen. So that allowed us to be able to see what that would look like when they came to market. So the green bond, and again, just a reminder that the basic credentials were the same between the 2 issuers in terms of credit profile and risk and things like that. The green bond was between 4 and 5 times oversubscribed, and the vanilla bond, I think, was probably just made it in to be covered. So that was a big difference. Firstly, is that we saw the oversubscription carry through in the green bond. We also saw a bit of a spread compression between the guidance that was issued on the bond prior to going to market, and then when it finally closed in terms of the issuance. So there was evidence again of the greenium, and just a quick explanation there is really when we are seeing investors willing to take a slight knock on the return in order to be able to access that particular investment. And so that did play through in the green bond in particular. So we saw direct first-hand evidence in the market there of two similar issuances, similar credit profile coming to market, and the difference with one being green and one being vanilla. And so that was a really, really interesting and exciting, I think, inflection point for the market. Subsequent to that, the green bonds have always been oversubscribed on the JSE in particular, and I think again that sort of reflected what was happening globally. However, what I cannot say without complete conviction is whether there's also just that confused with a general kind of search for high quality liquid assets in their entirety, I think, to your point earlier on, Andrea. So that is it, but what we're seeing definitely is a greater investor interest in that. The second example, which I think demonstrates the attractiveness of such an option, was another property company that came to market, at this time a corporate. The first example I gave were actually two municipal bonds, two municipalities coming to raise in the market. And the second one was a corporate. And this was a property company that was coming to raise debt in the market. What was really exciting for them is that they came looking for bonds that were 5-year duration. And at the time of issuance, they actually got interest, and because on the back of that interest, were against market conditions able to actually raise a 7-year and a 10-year bond in the market. Now, when you're looking at a risk-averse market, obviously the longer tenor bonds are going to be less attractive because people kind of like, we don't know if you're going to stick around for that long. We're not sure if we're going to put our money into a bond for that time. But this company is actually, and then the company treasurer actually said that she had attributed that entirely to the fact that they were green bonds. So they came to market able to raise more than what they intended intentionally, and also for a longer term. And so that went against what we were seeing general practice in the market being sort of 5-year bonds as what you could get, and that was kind of the cap on it. So two different examples, one corporate, one municipality kind of comparability, and then looking at it both from the greenium that we could see coming through in the market, as well as the direct impact in relation to the ability to raise longer term debt at favorable rates as a consequence of that. So those were good examples that we saw. What we are seeing then also is an increase in questions around the credibility. So globally, we have seen that, you know, the green bond market particularly had seen a massive uptick. I think last year we saw a little bit of a clawing back on the market, although I just looked at the recent results, and quarter on quarter from first quarter this year versus last quarter last year, we've seen an uptick in issuances globally, which I think is encouraging. Green bonds still dominating, and Europe still dominating in terms of who the key issuers are in the market, but we're seeing that growing as well. What we're seeing now, of course, is the questions around credibility. So if I look at the South African market, and that's playing out in different ways, I think firstly is the direct sort of behind closed doors engagement that we're certainly hearing our companies, and you know, the institute that I work for now actually has all the big companies, most of the listed companies in the country there, and you get to have these conversations as to what they're seeing. And they're getting increasing questions. And the reason I bring that up, Andrea, is because I think the credibility question is one that we're going to see grow. If we look at the sustainable finance market in its entirety and the products and the labeling that's happened, we did start to see a bit of a clawback on some of those numbers as we started to see regulation, for example, intensify, which then, you know, had very stringent requirements that then didn't allow companies to just label investments as sustainable or not, for example. And so we're seeing that as one push. We're also now seeing a lot of other stakeholders asking questions about, you know, what companies are doing. Also, if we look at, you know, generally the credentials of companies, and we see that companies that, you know, overall do well, have good ESG ratings, things like that. And then you also have a company that might not have a great ESG rating on impact, but its issuance, which could be ring-fenced in terms of a green bond or whatever, actually getting a lot of interest. But now we're starting to see people asking questions. Well, if the entity in its entirety is not thinking about this, then really is that not being disingenuous to come to market with a ring-fenced issuance? And so sometimes I feel sorry for companies. It's kind of damned if you do, damned if you don't, right? But that we're starting to see happen. And then just to finish off, the second pressure point is certainly coming from other stakeholders. So, I mean, I operate in an emerging market context. South Africa, like, you know, in the previous panel was mentioned by one of the speakers, is also still heavily dependent on coal. So we know that there are massive also societal impacts, right, from those emissions, apart from the carbon emissions in the atmosphere, but there's also serious health impacts and things like that. And you're starting to see stakeholders asking questions about that. We're certainly seeing a big uptick in shareholder activism. In the last few years, we've had every single bank have shareholder activists present at AGMs asking about policies. And then also at the big emitters, we've had AGMs being disrupted. And so these, I think, are really interesting points to tell you that there's a broader interest in what is going on. Credibility is going to really be questioned going into the future. And I think also just generally a sense of urgency coming through from civil society that is bearing out in different ways to then just purely the traditional investor pressure that we've seen.
Yeah, it's a really good point. Thank you for those examples. And actually, it's really good to hear that those with the green credentials are being oversubscribed despite some of the dynamics that are going on. And that credibility point, I think, is really crucial for people here to take away. I can see, obviously, I sit in a civil society organisation, but I'm a finance person, so kind of double sword. And I can see the pressure that's coming on credibility and the litigation risk that's coming through. And I think so for businesses, governments are being litigated against if they don't act, but then businesses are under pressure to make sure that the data and what they are disclosing is accurate and true as well. And I think, so Burjo, I would love to turn that back to you in terms of the need for accurate data. I mean, how do you ensure you've got quality data in your business, and what's your advice to the audience?
Thank you. Absolutely, I agree with you, Andrea. How we size opportunities, for example, to innovate on sustainable solutions. I think every organization, company, or institute, whatever it is, so they need to track their KPIs to retrieve accurate data. We need to all conduct a materiality analysis to see our current opportunities and risks, and within we can set real clear plans matching with our commitments, how to reduce our emissions against rising climate risk, for example. As we all discussed in the previous panel, and Mr. Argudar very well explained, but I want to emphasize again that when we consider accountability also, or credibility, brand reputation and brand resilience are also depending very much on data accuracy and emission reporting. Ultimately, out of industries, we all need to engage with energy trading system at the end. And data accuracy is a crucial part of emission reporting, monitoring and reporting as well. Therefore, data accuracy and emission reporting reflecting the transparency of the Institute's sustainability reporting, and also impacting the ESG risk score, what he didn't like, but I don't know any other term, ESG risk score and a sustainable to success maybe ultimately. And these two today are the major indicators for global index, or ultimately provide a total credibility point of view for investors. How we do as Controlmatic and what we advise, sure we pretty much appreciate skilled and organized employees. We believe in the human power. And also we ensure that our facilities are equipped very well, for example with water meters, flow meters or sub-meters, which enable us to continuously monitor our water or energy consumption at the facility. But we also leverage digitalization, and we advise everyone to do so. And we use our own IoT models to track our KPIs very precisely, and also use support of emission tracking software, for example, to monitor and instantly report our emissions. Both at facility and corporate level, to be honest. So eventually, I strongly advise monitoring and recording accurate data with any methodology that you deem appropriate and precise. I strongly advise leveraging digitalization. I don't say IoT is a must, but digitalization is the crucial point here. Because today data is something like who has the data controls the future. Therefore, accurate data is not only helping the organization and institutes or companies to manage their risk, for example, climate risk, but also help them, for example, to avoid and cope with natural disasters like fire, flood, earthquake, and enable them as well to build resilient future, create resilient communities, and finally resilient and healthy planet for all.
Thank you. Really interesting, especially the point about skilled people in your team. Shamil, I want to pivot back to you before we move to Andreas. Thank you for your patience. I want to bring in governance. I think it's so crucial, and you've lived and breathed this in terms of attracting investors into South Africa. Interested in your thoughts, and also I think really like what are the usual sticking points, and what is your advice to businesses in the audience in terms of overcoming those?
Thank you, Andrea. So South Africa, I think, went about the issue of governance slightly differently, and I'm integrating this with sustainability overall. And of course, the professor made a great point in the previous panel. I feel like he answered it for me. And South Africa is a place where we've started with governance as being at the forefront. So if I look at the way the practices in sustainability and disclosure have evolved in the market, it's actually on the back of a very strong governance focus in the country. So some may be familiar with the King Codes of Corporate Governance, and that really is the corporate governance codes within the country, and has for a long time been considered to be probably the leading code in the world. Some of you know Professor Mervyn King, who I think is really well known in the governance ecosystem. And so that came into being, I think, in the late 90s, and we're currently on King 4, so the 4th iteration of the King Codes. Now, what's interesting is that a code is a code and it's voluntary, right? But the Johannesburg Stock Exchange actually adopted that into the listings requirement. So it became mandatory by virtue of being integrated and becoming a listings requirement. So companies are actually obliged to use the King Codes on an apply and explain basis, and this goes back into the 90s. Now, from at least King 2, the concept of integrated reporting became a requirement as well. So companies need to produce an integrated report, and that is why often, you hear South Africa being kind of like the home of mandated integrated reporting, but just a qualification that it is in the context of the listings requirement of the JSE, and that the listings requirement, want companies to do King on an apply and explain basis, and a recommendation of King is integrated reporting. So that is where we see that coming from. What is more important than the integrated reporting actually is the governance sort of concepts behind that around integrated thinking. And I think when you're talking about the sticking points, if I could reuse that example for me, I think has been where it has really been phenomenal what that's done in the context of the market, disclosure, thinking, and practice in South Africa. So when you go to integrated thinking, which is really at the heart of this, it's not looking at your sustainability issues as something separate or outside. It is really about saying at the heart of good governance, which is what you want for a company to be able to thrive and survive into the future, is to be able to say what are all the material issues a company needs to consider, and that sustainability issues, if we're talking about the S issues and the E issues, are part and parcel of that. And so that at that integrated thinking level, and to bring in that concept of double materiality as well, is that what of all these issues impact me as a company, but equally importantly, what is it that I do that impacts on these issues and has an external effect? So the way I think, the way I produce, what I do, the way I use my resources, and very briefly, and I won't do the crash course in integrated reporting, but I mean, you're talking about the 6 capitals that we're referring to. And when you want to go into details on the integrated reporting framework, I think that's a good one to look at. So the sticking points have been, how do you think about this, and how do you ensure that you're giving adequate cognizance to these issues in the heart of how the business thinks? And is thinking about that. So even the issue of the externalization or the internalization of externalities, would have to be a part of that thinking. Now, what that's done is create an ecosystem where it's just been kind of natural for companies to think about sustainability. They're certainly not perfect, and I come from the JSE and we've looked at that, but what it has done is create a fertile ground for behavior change and different thinking, and for an entire ecosystem to start thinking about it from that perspective. So that's the first one, is that the integrated thinking is critical. If we're going to think about sustainability concerns as an add-on, it is never going to fundamentally shift business models. Unless, of course, we're faced with the risk directly, as we're seeing in some of these risk manifests now, and then you're doing it because you have to. But the forward thinking is not necessarily something that's there. Also, we need to know that from a governance perspective, we are fighting against an entrenched short-termism. The financial system is premised on short-termism, by and large. Yeah. And so we're looking at using a governance architecture and a system to really try to understand where that sits and to start making decisions differently. So the governance ecosystem is critical. In terms of how you can make it work, I think the integrated thinking is critical. For South Africa, again, because it sits in terms of the codes and saying it's the responsibility of the highest body, the governing body, which is the board, to think about this. It has to sit there. There has to be clear reporting around how that board is constituted, and I won't go into all the details. Elif's already articulated some of their examples, but that is just part and parcel of good governance. How do you constitute a board? How do you have diversity of thinking, of all different levels of diversity, to ensure that you can adequately consider all of those issues? And then, of course, how those what is the reporting line from the company? How does that then have responsibility into the board? And as an example, in my past life, I was the head of the Chief Sustainability Officer, and I reported 3 times a year into the Social and Ethics Committee of the board. And a Social and Ethics Committee is mandated through the Companies Act requirements in South Africa. And so then you're facing sort of very senior members of the board in asking you questions about how you've approached sustainability and what you're thinking of. And so there's this constant feedback loop and an accountability loop. So definitely, how's the board constituted? How does that then flow through to how management thinks about things and report to the board? Is the board adequately competent to be able to assess those issues and therefore ask the right questions? Or you're just going to end up with tunnel vision of 10 accountants all asking the same questions, and that's not going to help us deal with the issues. And then lastly is the monitoring and evaluation. So, and again, Bush, you mentioned that earlier on, but if you have to have the systems to ensure you've got the right information, to keep the credibility going, and to make sure that you're able to have an impact, and that is directly measurable. So governance is critically important in ensuring that you address the right issues, that it's dealt with at the correct level, and that you have the right thinking in the room for enough diversity to ensure that you are tackling all of those issues you need to be thinking about. So I'll leave it at that, Andrea.
Gosh, there's a lot in there, but it all makes great sense. And there's a couple of points to pick up on there in terms of what's voluntary and what's mandatory, and that shift of not doing something because you have to versus the integrated thinking. Now, we can all sit here today and go, yes, this all makes great sense, but we go back to our business, back to our desk, and there are pressing issues to deal with, and it is very easy to just carry on as business as usual and think, yes, we'll get to it, or somebody else is going to do it. So my question, Andreas, thank you for your patience. You advise businesses, you advise boards. How do we actually motivate businesses, and colleagues to move on this, to drive change? Share your experience, please.
Yeah, thank you. And it's been great to listening in on the first panel, and also now I can pick up on so many points. I mean, it's right there on the header or behind us, I guess, in my opinion, that the answer at first glance is relatively easy. I mean, just think about it yourself. What are we focusing on? What does this industry and the people that are not necessarily in a day-to-day think about when we talk about climate and energy transition, sustainability, etc.? A lot of times, and we had discussions before that, there is a little bit of a, focus on risks. It's very a risk-focused approach. It's risk and reporting, it's regulation, somebody telling me something to do, conversation before, they can't be very much proactive in the capital markets because reporting and data collection. So there's a lot of negative connotation to what we're discussing here. And we completely, or maybe not completely, but if we would spend the same amount of time focusing on the opportunities, we would be at a complete different level. And I think that's when you ask how can you motivate organizations or individuals. I mean, you can play this in any situation in our personal or in a business context. I mean, if you only focus on the risks, you're very unlikely to be very proactive and go into, try to change, try to go into any transition. And if you also look in the opportunities, what happens? I mean, you're focusing on, all of a sudden creativity comes. Generally, there's a different energy to this. If you focus on risks and opportunities, you're much more likely to take action, to create some sort of impact. Creativity, innovation, some of these things we've been talking about or have been talked about before. I mean, these are essential to any organization and business as well. But unfortunately, I've noticed that many times this is very risk focused, and that's kind of taking a lot of the energy out of it. And I think, and congratulations to all of the organizers and to all of us, to all of you for being here, because all of us, it's very clear that it's important to you, to us, in one way or another. But I think one other aspect is we need to be able to translate what we're talking about. So to motivate people, we need to be able to translate what we're talking about into the different languages and the different personas so that these people can take action. And from my personal perspective, over the last couple of years, I don't know, I've spoken with many boards, many management boards, supervisory boards, sustainability teams, investor relations teams. On a board level, you would be maybe not surprised how many cannot have it not translated for their decision-making process on what that actually really means. Again, more likely that they focus on the risks, not on the opportunities as much. Translate this into a forward, like climate and transition later. Translate this into what that means in terms of your ESG profile now, and what does your action mean in terms of forward-looking valuation impact on your company. All of a sudden you have the attention of a CFO. And that's the language that they need to take actions in. So what does that mean in terms of quantifiable terms? This is possible now, right? Theoretically, we can do that. We just don't focus on it. We can try to drive that change and to develop our strategies by focusing a lot more on actually the opportunities. Of course, don't forget the risks, but if you focus on the opportunities, productivity very likely goes up. Innovation, new business development, that has a direct impact on your top line, right? That's financially material. I mean, we talk about this. But you can quantify this, and I think that's actually a very, very, very big point. And that's the duty, I guess, for all of us as well, because it starts with us, to kind of drive that chain forward and have our little impact there. Because, of course, some of the externalities we're not going to change, right? Climate change is here, resource scarcity, changing customer product demand, these things, very, very difficult to influence, but I mean, we can react to those. And the more you look also in the opportunities, what will happen to your organization? It's going to be a lot more adaptable to what's going on out there. Regulatory change, anything, right? So that means that by doing that, and I think that's a very big task, but conceptually it's not difficult to do, by focusing on the opportunities as well, which is by definition in what we're talking about, a long-term plan, a long-term goal. But by doing so, you become more adaptable, you become a lot more resilient along the way to achieve those goals with the problems, with the risks that we've been focusing on just a couple of minutes ago. By having an opportunity focus, you don't ignore the risks, but you can deal with the risks a lot better along the way and find solutions for it. And that means that by focusing on a long-term goal, you actually, and you mentioned it, integrated thinking, I loved it, and credibility. If you have the right governance structures, and if you're really committed to doing this as an organization, the capital markets will give you the benefit now. That's the funniest thing of all. You plan for something that some people think needs to be solved in 20, 30 years. I do not agree, but like that's sometimes the connotation. But if you commit to it, you actually can see the benefits now. So isn't that funny in a way? So to sum it up, the word is right there. It's opportunities, in my opinion. We got to focus a lot more on the opportunities and translate it into the people's language. So qualification, I said it last year, and then I wrap up. I'm a massive supporter. We need to qualify our people and upskill them and educate them a lot better on what that actually means to them. Why are we doing this? And then you have a lot more integrated approach and things move. So.
Thank you. I can feel my own energy actually lift when you talk about opportunity, and I think that connection, because we need a whole, the word Dr. Erdogan mentioned earlier, like we need a change of thinking, and that's a change of human behaviour, and humans by virtue, we respond to opportunity rather than risk. So I think it's a great point, and obviously the shift in narrative, the words that we use. So talking in the positive, if I could turn back to you, Elif, is just so you are in the renewable energy business on the frontier. Where are the next opportunities? And I'm thinking in terms of the businesses that your clients who are businesses, where can they tap into the opportunities? What do you see?
Of course. Well, in Turkey, our renewable energy market is a very fast-growing market because the incentives by the government were, started to be given in the beginning of 2010, let's say. So all the installed capacity, new installed capacity, is mainly from renewable energy, and Turkey still has a growing demand, and it's driven by the GDP. I would like to give you some numbers on that in order to better understand Turkish energy market for everyone. The GDP growth from 2002 to 2022, it was around 7.9% annual growth rate. And the demand for electricity consumption grew in the same years, between the same years, for around 4.7%. So the demand growth is driven by our GDP growth, since Turkey is still an emerging economy, a growing, developing country. And when we look at the electricity consumption per capita in Turkey, this is data of 2022, it's around 3.9 megawatt hours per year per capita. And when we compare it to European Union and OECD countries, it's way below their per capita consumptions. The number for European Union is around 5.7, and the number for OECD countries is 7.8. So Turkey still has a way to grow, and this demand needs to be covered with new installed capacity, and we believe that the support of government to renewable energy will continue in Turkish energy market. But of course, renewable energy needs additional investments for the infrastructure. So the supportive behavior of government has led us to a way with new renewable assets combined with battery storage. The government issued pre-licenses for around 25,000 megawatts for companies, for each company, and IDEM Renewables has also obtained a pre-license for these kind of projects, battery storage coupled renewable asset projects. However, they capped the pre-license at 500 megawatts per company, so we obtained 500 megawatts. We applied for more actually. But we believe that the next term, in terms of Turkish energy market, the next opportunity will come from battery storage investments. And together with that, I would like to give some more examples in order to support our theory on how government will support renewable energy. In 2015, I looked up the numbers for the installed capacity in Turkey. It was around only 73 gigawatts. And only 16% of it was renewables, and it was mainly state-owned. And together with the new investments within the country, currently, as the end of April, the installed capacity in Turkey is around 109.2 gigawatts, and 57% of it is renewable. It's a huge growth, and it's only between a few years actually. So we lived this growth, and we will continue living this growth because the demand growth needs to be covered with additional installed capacity, and we believe that the government will continue the growth of renewables, since Turkey already has a current account deficit, which is mainly driven by the energy imports. Although the installed capacity composition starts to change, we believe these new technologies supporting renewables, since battery storage also supports the infrastructure technology too, will be the next term opportunity for Turkish energy market.
It's great that the government is supporting the
Yes,
transition.
and they have announced a new feed-in tariff for these kind of projects in order to support.
I'm
Yes.
acutely conscious of time, but I want to come back to Andreas and then wrap up with Shamila. Andreas, I'm going to come back to you. This is a tough question, but I think we've got a range of different businesses here. From your experience, from the businesses, the boards that you've spoken to, who do you think, which type of businesses do you think are going to win during the energy transition, and who are going to be the losers? What I'm thinking about attributes here as opposed to sectors. What do you see? Are there any commonalities?
Well, first of
Evil
all, the
question.
question is what do you define as the winner and the loser, right? But I mean,
What's
knowing
needed?
that we are between us and London, try to be very, very quick. But in aspect, I think it's actually sector and industry agnostic at an overall level. And it's linked to what we all discussed before and also what I just stated. I think it's the companies that are going to win that are going to commit to, that have a credible commitment to do something and strategically take a holistic approach and work with what we have, climate and energy transition, irrespective of whether you're a financials like Garanti here, they do really, really well, have a multiplier effect, etc. I mean, the impact that a bank or an insurance company can have is massive, right? They can come up with the winners, and you can see this very, very clearly within the sector. And you know what? In the short term, companies like ADEM or others in maybe areas, with renewables, battery storage, we heard, etc. Of course, there is generally a lot more attention going into that direction right now, and from a market perspective, you could kind of see, okay, these are winners. I do believe that within those sectors and industries, there's still a huge difference between companies that that are in it, to the degree that they commit and actually take action to really generate an advantage out of the situation that they are in. And the differences that you can actually have in an emerging or in a frontier market compared to a Western, or more developed market is actually even bigger. So I think that we will see a lot of the winners coming out of emerging and frontier markets that have an open, innovative approach to their business. And that can be an oil and gas company, that can be carbon intensive industries and sectors as well. In my opinion, that really doesn't matter, because we will probably still need oil and gas in the years to come. There is no real way around it. Hence, companies will come out of the winners there as well. So I think it's again more of a mindset approach at first, and then really having a proper strategy that looks at the risks and opportunities for differentiators, access to talent, product innovation, technologies, and that can actually happen across. Doing nothing, cost of doing nothing exists, right? And it's there, and you're fighting for capital, and you're competing with basically the local and the international, environment and universe and capital markets, and it's being noticed. And last point, I worked at S&P until very recently, and when you really focus from a cap markets perspective, I mean, you can kind of count down from an index perspective on how long it takes, for companies that don't have the best ESG profile to get less access or more difficult access to capital, to drop out of indices, etc. So in a way, the clock is running anyway. The question is just, do you notice it when you have a real wide comparison and perspective or not?
Wonderful, well said, thank you. And I think that point about growth in emerging markets and those that change the mindset, that's definitely what's attracting financial markets as well. So, strong message there. I'm very conscious of time, and I do really want to take advantage of having Shamila here. Just to wrap up with a final question, so much of the discussion is about net zero and about the sort of language of reducing carbon, but I can see a very noticeable shift in the global agenda towards what's called climate resilience and adaptation. That's coming as well. Shamila, I would love to hear your opinions on what, translating that, what does that mean for business?
Thanks, Andrea. Well, firstly, it means that the chickens are coming home to roost, right, if we're talking about adaptation already. But I think that's also reflective of the fact that we know that we've already locked in to a certain amount of climate change and the impacts already. Africa is a continent where the modeling tells you we will face anything between 2 and 4 degrees higher of whatever the global average ends up being, which means that even if we end at 1.5 degrees, we're going to face 2 to 5 degrees increase anyway, and that has severe consequences. So from the adaptation perspective, I mean, there are massive implications for food, agriculture, for whether it's kind of climate migration and even kind of refugees and things, and those are of course the serious consequences we need to talk about. I think the bigger part, particularly for a continent like ours, is that also because of your massive inequality, unemployment, and things like that, it's also your most vulnerable who are the least able to adapt that are going to face the biggest consequences of it. So that unfortunately is what we're seeing. But what it does mean is that, from a business perspective, I think businesses need to be cognizant of what those physical risks are and what those transition risks are. But on the flip side is that also provides those opportunities, right, to get ahead of the curve and being able to say, well, what are the new models? What are the new potentially products and services that we need to be offering? It has a massive impact, for example, on infrastructure, and governments don't go it alone on infrastructure. That is a discussion that needs to happen across the board. I do see the impact for business is that it is going to have to bear the brunt of a lot of this. I mean, there's many ways in which this manifests, but it also then is at the forefront of being able to create the opportunities, and I think the kind of enabling environment for business to do better in those spaces. I also do see that we can't have this conversation devoid of the element of trust. And it is an increasing expectation for business to step into places that it hasn't traditionally done that. And Andrea, I'm very quickly going to refer to the Edelman Trust Barometer. For those of you that follow that, is a barometer that measures the trust that civil society has in each of business, government, the media, and effectively those entities. And if you've seen what's happened over the last number of years, we saw firstly as a step down in trust, certainly against governments, media, and things like that, and we can understand why, but an increase in effectively the trust being placed in business. And so the implication for me is that the expectation is that business is going to step in and is going to step up and is going to show leadership. And that is an opportunity to be able to say, well, what can we co-create? How do we shift the narrative to be able to have collective conversations that say there are fundamental issues that no one can solve on their own. So if we don't step in and have a view as business and work together closely with governments and civil society, we're not going to deal with these issues. And so for business, those are massive implications on saying, where's opportunity? How do I clearly articulate the risk? How do I work with government and civil society in creating resilience across the board? And those are some of the areas we need to look at. Of course, those massive opportunities in saying, well, what does that mean? And how do I invent, different things, do things differently? How does my relationship with society in its entirety change to be able to start making that a more meaningful conversation and realizing that our resilience is going to be as really a direct impact on how we are able to collaborate together. We're certainly going to see some of those impacts, and we're seeing some of that being priced into markets. The flip side is those businesses that are doing better and considering this are actually starting to see those, the benefit of that, as Andres has pointed out. So there are multiple areas we need to think about, Andrea. I don't know where to start, to be honest, but I'm hoping those help.
That was really good. That was, it's a big question that lots of people are battling with answering. And I think it's important that people here are aware that that discussion's happening. I'm going to wrap up. We're on the hour. Lunch is waiting for us. I can carry on talking and asking you questions all afternoon. We don't have time for questions of the audience, I'm afraid, but do please find the panelists out during lunch and keep talking to them. And I think just to wrap up a few points here for those here, so credibility is absolutely crucial, and linking that to governance and the mindset. And I'd say to those of you here today, we see the point of upskilling. I know there's the CFA Institute are here, and the work that they do is fantastic in upskilling, but when you go back to your desks when you go away from here. It's all of you that are going to make a difference. Don't wait for someone else. You take it in, you bring the conversation up, we talk, we use the narrative of the opportunity, and hopefully we can get some more momentum going. But good luck to you all in Turkey. I'd love to see, come back next year and see how we've done. Thank you.
Thank you for this insightful panel. Now it's time for lunch. Let's say a quick lunch. So we'll be here around in 30 minutes.
Afiyet olsun.
Fotoğraf oluyor mu?